Hi guys, welcome back to Finpact. So much good news has been happening in the crypto markets. The long-awaited Ethereum merge upgrade has been announced and the timeline has also been outlined. So I'll be going into that in this video. But this is going to strongly impact Ethereum Classic, which we've seen rally over 50% on the news of the Ethereum merge, which is basically Ethereum moving from the proof of work consensus mechanism to proof of stake. Now, this is very interesting because in July 2016, Ethereum hard forked into Ethereum Classic and the Ethereum that we know today. So essentially, these two separated as two different blockchains with different technological and philosophical goals. Now, I'm sure many of you guys know, but the reason the hard fork took place is because some attackers saw a fault in the smart contract. The hackers actually exploited the smart contract code that was running on a prominent application on Ethereum called the DAO. So the community was of course concerned, and that's why Ethereum hard forked, because some of the community voted on rolling back on these DAO transactions. And this also allowed the original contributors to the DAO to reclaim their funds. Now, once again, the Ethereum community is at crossroads, where the community has voted to transition Ethereum from proof of work to proof of stake. But not everyone has agreed with this shift in the consensus mechanism, and therefore many holders and miners might integrate onto Ethereum Classic. Because Ethereum Classic is the blockchain that uses a proof of work consensus mechanism. And this is exactly why I believe that the Ethereum Classic price could explode when the merge takes place. This merge is expected for September 2022, and provided everything goes well on time and there are no delays, I do think that the Ethereum Classic price can explode around 55% depending on the overall crypto market sentiment. This isn't the only reason I believe Ethereum Classic's price could rally. We've also seen some crypto relief from the Federal Reserve, and we've seen some positive momentum with Bitcoin as well, and also the rest of the altcoins because of this. As you can see, Bitcoin topped $24,000, and in my previous videos, I was saying that it was struggling to move past the $20,000 mark. We kept seeing it bounce back and forth to 21,000, going back down to 19,000, and now we have finally surpassed the $20,000 point. What actually happened is that the interest rate hike that was proposed by the Federal Reserve was not as high as people were expecting, so traders capitalized on this. So jumping onto CoinMarketCap, you can see a lot of the major altcoins and Bitcoin are in the green, pretty much across the board. They've all seen rallies up. And if you look at the 7-day percentage changes, they've recovered 67% for Ethereum Classic, 14% for Chainlink, FTX is up 19%. So major rallies we're seeing, Avalanche is up 30%. Solana up 24%. Of course, we've not recovered to bull run levels yet, but this is some decent recovery points, especially Ethereum Classic, which is up, well, just gone up to 68%. So in the 7-day chart, that is some major recovery. So let's take a look at the charts and go into what this merge means for Ethereum Classic and their miners. So Ethereum Classic is sitting at $23.50. You can take a look that year to date, we have seen a major spike after literally 4 months of declines. And in the all chart, yes, we're nowhere near the all-time high price, which was obviously during the bull run around August time 2021. But we've seen some decent recovery given where we were thinking that we were going to head. Now, the reason Ethereum Classic has jumped so high compared to many other altcoins is, of course, that it's an Ethereum-based token, but also that many miners will be shifting over to Ethereum Classic. The thing is, ETC has definitely got the potential to support Ethereum miners coming in. They will need some minor upgrades to take place to be able to have the mining relevant to Ethereum Classic's blockchain, but they have the capabilities of doing so. So ETC has major potential in being able to accommodate the shift of miners to their network, but this will need some minor upgrades to take place before they're able to start mining. Now, the thing is, miners also don't want to lose their expensive equipment. They don't want it to become useless. It's expensive stuff. Now, a lot of people expect the current hash rate to move towards Ethereum Classic. By the way, guys, a hash rate is a measure of the total computational power used in a proof of work cryptocurrency network to process transactions in a blockchain. It's basically a measure of how quickly a cryptocurrency miner's machines can complete computations. Also, guys, if you take a look at what reporter Colin Wu has said, he said that transitioning the current hash rate to ETC can create the risk of a 51% attack. Therefore, miners might be inclined to launch their own blockchain. But as he said, it is unlikely for miners to come together and build their own ecosystem. He believes that ETC still remains the ideal platform for transitioning Ethereum's hash rate, so this process can be motivated by the presence of mature dApps that are already on the Ethereum ecosystem that were within the proof of work mechanism. So I've just pulled up the ETC charts, and from around March time, we've seen over the last 4 months just low after low. So this is what we call a descending triangle, and it's just where each high gets lower at each point as time goes on. But the support and resistance lines in the last few months have been just around these levels. We did, however, break past the support line around May, but this was obviously exacerbated because the overall crypto market sentiment had extreme fear, and this was obviously caused by the domino effect that we saw with the Terra USD crash and the whole Terra ecosystem, and then the macroeconomic situation was getting worse and worse, particularly with rising interest rates, which luckily the interest rate hikes have been softer than expected. So at this point here, we've broken past the resistance line substantially. So what I do think could happen over the next few months, but again, remember, this is not financial advice. This is just based on the charts. But remember, charts are not always indicative of what will happen. Fundamentals play a huge role. Overall crypto market sentiment plays an even bigger role. So even if fundamentals are good, sometimes overall crypto market sentiment can disregard what's happening that's fundamentally positive. So right now we have seen some great fundamentals. So I think we have a high chance of being a little bit volatile in this triangle region here until we get to September, which is when the merge will take place. And at this point here, leading up to that, we probably will see some rallies towards the upside, potentially up to the highs we even saw in April. So we could even see a $52 ETC, but that could be unlikely depending on how the rest of the market is doing, how the macroeconomic situation is doing. That is only if everything starts moving into our favor, like we've seen recently with the uptick. Now let's talk about what the Ethereum merge is. I've already mentioned that it's moving from proof of work to proof of stake, but what does this actually mean in practice? Well, first of all, Ethereum initially had a lot of emissions made due to its mining. Basically, the mining required a lot of electricity to verify the transactions that take place on Ethereum before they go onto the public blockchain. And this is because it was a proof of work consensus mechanism compared to a proof of stake. So what happens if mining is not taking place? Well, proof of stake, it's in its name. Staking takes place. So staking is a mechanism that replaces mining to verify these Ethereum transactions on their blockchain. So essentially, the staking is the new way of the verification process instead of the mining. So in a proof of stake model, an algorithm selects which validator gets to add the next block to a blockchain based on how much cryptocurrency the validator has staked. And if investors want to become an Ethereum validator, then they need to have staked at least 32 ETH. But also individual investors can also join staking pools. So essentially, these are collections of Ethereum stakers that combine their resources and get to split the rewards. Now, this is all fair and well, but so many people have been saying, does this merge mean that transaction fees will go down? Because if you guys know, transferring anything on the Ethereum blockchain is just, well, expensive, really expensive, and actually annoyingly expensive, because sometimes if you want to just transfer $100 worth, sometimes fees can be $150 worth of Ethereum, which makes no sense. Obviously, when markets are lower and demand is less, then Ethereum's fees are lower, like we've seen in the last few months. But during the bull run, do you guys remember how high those fees got? Because I found it so frustrating to just transfer some ETH. So I'd actually have to wait till I collected things on the Ethereum network and make one big shift, because the gas fees were they just made it almost pointless trying to transfer on the Ethereum network. Everyone was using Binance Smart Chain or Polygon or some other network with low fees. And as you can see, that the Ethereum merge will not necessarily reduce gas fees. So Vivek Venture said in his tweet that Ethereum's high gas fees are because of increased block space demand and not a function of the consensus mechanism. And remember, right now the merge is basically just the shift in the consensus mechanism from proof of work to proof of stake. And then he concluded that the network fees would not come down. Instead, users can use layer 2 solutions for reduced costs. And these layer 2 solutions are things like Polygon-matic. If you guys don't know what Polygon-matic is and how it works, I've made a few videos on it and I'll link them in the description box, but that explains it there. So anyway, guys, what do you think of the new Ethereum merge and how it will impact both Ethereum's price and Ethereum Classic's price? I'd love to hear what you guys think. Leave your comments down below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification. so that you get informed on when I release a video, as a lot of the information is time sensitive. Also remember that everything I say is not financial advice, it is just my opinion and my experiences in the crypto space. So make sure you do your own research before you invest in anything or make any trade. Thank you guys for watching, and I will see you in the next video. Bye!